Workhorse earnings are out. Is it time to celebrate or cry? In this video, I'm breaking down the Workhorse Q3 earnings and also have a look at the stock price. It's Marco here and welcome back to All About EVs, analysis and news on all EV stocks. I am not gonna drag you through the entire video just to hear the bottom line. I will tell you what I think of these earnings right here, right now. So as I promised, the bottom line of Workhorse Q3 earnings is that they were quite bad. And on a scale from 1 to 10, I would give them a 4. But I'm still very bullish on Workhorse stock, especially for the long term. And I still believe this is gonna be a 10x stock. So let's dive into these earnings and let's have a look at the bad and good things that have come out from it. Workhorse sold only 7 vehicles in Q3. But don't get me wrong, there is actually some good news as well. So of the 7 vehicles they sold, 2 went to Ryder, and we know Ryder, it's a known partner. And 5 vehicles went to Pritchard. But the quality of these 5 vehicles was so high that Pritchard placed an order for another 500 vehicles. And they also spent some very positive words on Workhorse. They said, and I'm quoting them, "We see this initial 500 vehicle purchase as being the first of many future orders and look forward to growing with Workhorse in 2021 and beyond." And that was straight from the COO of Pritchard. This is incredibly bullish, guys, because Pritchard is one of the US biggest vehicle distributors. They sell over 30,000 units annually to customers and across all 50 states. This is massive, guys. 30,000 vehicles per year would give Workhorse a massive boost. Also, all 50 states, Workhorse can sell in all 50 states. Not all companies can do that. And Pritchard went on to say, "We appreciate the opportunity to be one of the first companies to commercially offer these state-of-art all-electric vehicles to our customers." In a nutshell, Pritchard is huge news for Workhorse and could really be a game changer. And another important detail needs to be said. Who is helping Workhorse in this deal with Pritchard? Just reading the title, Hitachi Capital America with their inventory finance program. And for those who don't know how important is inventory finance for commercial vehicle, I'm gonna quickly break it down for you. So that's how it works. The dealer gets a loan from a financing company based on the value of the vehicles. When a car is sold, the dealer can pay off the portion of the loan related to the car or purchase more inventory to sell. This is so important because it helps Workhorse sell more vehicles, and also this bit of news is incredibly good because it means that the deal between Workhorse and Hitachi is really working. But hold on a minute, the quality was right, the financing is there to help us. What did go wrong? Like, we sold only 7 vehicles. Workhorse tell us how and why it happened in the filing itself. They said they couldn't produce because of the inability of their battery supplier to meet their volumes and also due to the Rona. So their battery supplier could not deliver due to the Rona. I don't want to excuse them, but it's quite normal these days. I know of a lot of companies who are really struggling because of the Roni. They also said that they couldn't produce because more than 36% of their production-related staff was actually out with the Rona. Again, labor is the first thing that goes down because of the Rona. So I was expecting some problem for Workhorse due to the Rona. But there is a bright side. Workhorse has found a solution. Sort of. We've introduced several new battery supplier options into our supply chain and will have supplemental volume additions in the first quarter of 2021. And that means they will have a more reliable supply of batteries next year. But that calls for a question. Can we still hit the 2020 target of 300 vehicles? Possibly not. This article on Inside EVs is very negative about 2020 Q4. And they are a pretty reliable website and also very knowledgeable about EVs. I personally say never, and Workhorse is far from being done with. If they find a good supplier, they could still make vans in Q4 and perhaps hit 80%, 90% of the initial target. It is not over yet, and I feel like they are already looking for some batteries to cover the gap. We will see, but you can bet that I will make a video update on Workhorse if good news comes out. But regardless, they will receive batteries from a new supplier at the beginning of 2021. And that's where things get very interesting. Workhorse sets 2021 production volume target at 1,800 vehicles, and most of the orders for these vans are already in the system. So that means that Workhorse just have to produce these vans and they're already sold. This is massive. Now, I want to clarify that this 1,800 vehicles is not inclusive of the USPS contract. I am sure that if Workhorse wins the USPS contract, they will have to scramble something together to increase their production. Everything is possible, and if any news comes out, I will make a video update and you'll be the first one to know about it. Now, let's have a look at cost and expenses. Is it all doom and gloom? So selling, general and administrative expenses increased to 6 million from 2.6 million in the same period last year. They also specified that the increase was because of consulting expenses, higher employees related costs, and incentive stock expenses. This is totally expected, guys. This is the same kind of cost that Tesla had to pay when they were developing into the massive company they are now. SG&A is the cost of upscaling the production. There is no hiding here. Come on, what do you need to make more vehicles? You need more people. And to hire more people, you need to pay recruiters. And that's what the consulting expenses are. And that's why they are growing. And higher employee related costs, those are salaries. So obviously you have more employees and you have to pay more salaries. Research and development expenses were 1.6 million, which is flat compared to the same quarter last year. This is expected as well because Workhorse is developing a refrigerated van. From a big picture point of view, this is going to be massive, guys. There are not many companies in the electric refrigerated van industry, and the potential for growth, guys, could be massive. They could sell vans to supermarket. It's a massive market, guys. Imagine selling to Walmart. It's a massive supermarket and it would be a game changer for Workhorse. So in total we have a net loss of 84 million compared to the net loss of 11 million in the third quarter of 2019. But the increased net loss was mostly due to the increase in interest expense. And to be fair, there is a good explanation for that. The increase in interest expense was almost exclusively due to the change in fair value of the company convertible notes. Guys, if you have stuck with me this far, great choice, and I'm gonna reward you just now. This loss due to the convertible notes is not a massive deal for the moment, which is great news, right? So let me paraphrase it for a moment. These losses are non-cash and were dependent on the underlying stock components of the financial instruments. So that means that the stock price of Workhorse is now worth less, not worthless, but worth less than when the convertible notes were issued. And this looks like a loss on the books, but it's non-cash, meaning the Workhorse doesn't have to pay cash for that sort of expense. So we know what the balance is for Q3. We know that this year we might not hit the delivery target, and we know what the plan is for 2021. There is one last thing to look at. the cash position. Have we got enough cash to get through 2021? The filing says that the company improved its current cash positions to over 260 million. This is good from a short-term point of view, and I'm talking about 6 months. But if the company does not start to produce and sell lots of vehicles, I'm afraid that they might need another round of financing to raise some more cash. And cash will be crucial for the company that is growing and it's developing into a full-blown manufacturer. You remember SG&A, the expenses we talked about earlier, and that are the ones that are gonna grow as the company grows. Remember, the Workhorse is a high risk and high reward stock, and it needs to be treated as such. So to summarize the Workhorse stock position, we are below $20, which is very good from a long-term perspective, especially if you're planning to hold it for at least 5 years, as I'm going to do because I'm an investor in Workhorse and I believe the company will 10x in the next 5 years. And so I'm expecting that the next bit of good news that will come out on Workhorse will pump the stock higher, and you can be sure that I will make a video about it. So subscribe to this channel if you like the sound of that. And if you're looking for an EV company that has grown a lot, consider NIO. The video on the screen right now is a super comparison between all the 5 Chinese EV stock like NIO, XPeng, etc. Pick an explosive stock, click on the video.